Jerome Powell is staying on as a Federal Reserve Governor, defying conventional wisdom. Jerome Powell is staying on as a Federal Reserve Governor, despite completing his term as chairman. One reason for this decision seems to stem from a speech Powell gave in 2020, where he mentioned a desire to serve in a lower-profile role, citing the need for stability in the midst of economic uncertainty. This statement led many to believe that his tenure as chairman was merely a stepping stone to his next position. However, few expected him to remain as a governor, defying conventional expectations and raising questions about the true motivations behind his decision to stay on. This move may suggest a desire to maintain influence within the Fed, rather than ceding control to a new chairman. Jerome Powell's pledge to maintain a low profile as governor has sparked debate among experts and market analysts. While he has consistently stated that he will not engage in policy-making decisions as chairman, his vow to remain out of the spotlight has raised questions about his motivations. One possible explanation is that Powell is attempting to avoid accountability for his actions during his tenure as chairman. By keeping a low profile, he may be able to sidestep criticism and responsibility for any consequences of his policies. This could be seen as a strategic move to protect his legacy and reputation. However, some argue that this approach undermines the transparency and accountability that the Federal Reserve is expected to uphold. In fact, many have pointed out that Powell's decision to stay on as governor marks a significant departure from the traditional approach of Fed officials, who typically leave public service after completing their terms. This shift in behavior has left many wondering what Powell's true intentions are, and whether he is setting a precedent for future Fed officials to follow. When considering Jerome Powell's decision to stay on as a governor, it's essential to examine the historical precedents and implications. In the past, Federal Reserve governors have typically retired from the board after completing their terms, but there have been instances where they've chosen to stay on in a lower-profile capacity. For example, Paul Volcker remained as a governor until 1994, despite having served as chairman from 1979 to 1987. This precedent suggests that Powell's decision is not entirely unprecedented, but its implications are still unclear. If Powell continues to exert influence as a governor, it could lead to a shift in market expectations, particularly in regards to monetary policy. The Federal Reserve's stance on inflation, interest rates, and quantitative easing may be perceived as more stable, but it could also raise questions about the potential for a Powell put, where the market expects the Fed to intervene in times of economic uncertainty. This, in turn, could affect the behavior of investors and the overall market, potentially leading to unintended consequences. Jerome Powell's decision to stay on as a Federal Reserve governor has sent shockwaves through the market, leaving many to wonder what this means for the future of Federal Reserve leadership. One potential outcome is a delay in the transition to a new chairman, which could give the current leadership more time to implement their policies. On the other hand, some analysts believe that Powell's decision may be a strategic move to influence the selection of his successor, possibly paving the way for a more dovish or hawkish policy direction. Either way, the implications for monetary policy will be significant, with some predicting a more hawkish stance to combat inflation, while others see a more relaxed approach to interest rates. The future of Federal Reserve leadership is now uncertain, and investors will be closely watching Jerome Powell's actions to see how they shape the direction of monetary policy. The potential successors, including current Federal Reserve officials and external candidates, will also face intense scrutiny as they vie for the top spot. Ultimately, Jerome Powell's decision to stay on as governor has opened the door to a new era of possibilities for the Federal Reserve, one that will shape the economic landscape for years to come. In conclusion, Jerome Powell's decision to stay on as a Federal Reserve governor marks a significant shift in our understanding of the institution's leadership dynamics. With his reduced role, expectations for Powell's influence may be tempered, but the implications for future leadership and monetary policy remain to be seen. One key takeaway is that accountability and transparency will continue to be crucial in the Fed's decision-making process.